Hello, everybody. This is Joshua Hayes coming to you with the May 11th stock market wrap-up for BigWaveTrading.com and BigWaveTrading.net. There's a lot of charts that are still working up, which makes me want to really think that maybe March, November is the bottoming area. However, the way the market's acting recently and the way that we have the lack of leaders working is very worrisome. For instance, look at TSYS. Is that how a leader acts? ALGT. Is that how a leader acts? And in Netflix, does a leader do that? No, it don't. So those are my problems, and that's why I can't fall in love with this market. But now let's start with the New York Stock Exchange today. Let's go all the way out on it so we can see the full scope of it. See it open at the high a day, never ticked higher. I never, ever like seeing that, ever. Yet we had it again today like we had on 420. And so the market sells off 2.52%, pretty nasty. However, the good news, volume's lower. Thank you. Still, it doesn't matter. You still lose profits in your longs whenever you don't take profits in this market. Now let's look at the S&P 500, which is what I follow all of my stocks to in terms of relative strength. A similar pattern situation, 92299 is the open and the high a day. Close at 90924, 908.68, almost a low a day close. Not good. And overall, that is is that an inside day job almost? Let's see, 908. So it's almost like a full inside day. It is on the closing basis, but the intraday, it got below the 909 level, so it wasn't a full inside day. But bottom line, volume's at least lower, and that's always good to see. Let's see how the NASDAQ did compare to the S&P 500. Did it sell off less than 2.15%? Yes. So you can see the relative strength line here on the NASDAQ down here. You can see that it's moved up. A big V motion. That's good. I always like to see that. I would love to show you the IBD 100 and IBD 85 charts, but that's going to be for subscribers only in part 2 because IBD does not have them updated yet. However, as you can clearly see with the NASDAQ, it opened at 1713, closed at 1731, which is a divergence from the S&P 500 Dow Jones Industrial Average. Hopefully, we can have another 1999, I would hope. Probably not. Doubt it ever again in my lifetime. Still, whatever. It's fun. The market at least is holding in. My final line of support. You guys want to let's start looking at a whole bunch of support areas. We got support here. There's a line of support. We got support here. There's a line of support. We're going to have support here on the NASDAQ, especially heavy right around this area. Below the 50-day moving average, though. And then, of course, right here is another support area. And then right here off the March lows is going to be the final line. If it gets below that line, that's bad. Also, if you don't want to use any of those trend lines, if you don't think that that's a right way of looking at it, you can go to this Fibonacci line. And even though I like the 67 or the 66, whatever it is, 68, 20, I can't even remember anymore. Why is that line there like that? That's weird. Okay, well, anyway, so there's your Fibonacci arcs, and then these would all be your support lines and levels. You can do that on any index. If you have telechart, you click on this little pencil here. You got a trend line, linear regression line, horizontal trend line, vertical trend line, which I don't know why you'd want that at all. ABC text, which is good because then you can write like this chart is okay. Okay, and then you're going to put it right there. So you can always do that too whenever you want to write on this index. I normally use paint to write, though. The Fibonacci arcs for Gann, Fibonacci fan, Gann lines. Here's to show you how that would work. You would go with the low, and then you just put it to wherever you want it to, like, touch those, and then there's some support lines. So there's many ways of looking at support for the market. However, whenever you see leaders going like this, and then MYGN was a leader before, that's not good. So you can see the same thing with all of these charts. Netflix, TSYS, ALGT, and then MyGen. And it's just the same thing over and over. And the stocks that are breaking out like ACM, look at what they do when they do. Down 2.8 because this is a flawed breakout. Some people are like, oh, it's a cup with handle. Yeah, I guess it is, but the cup is sloppy. It has a lot of volume during the base. Here's their cup with handle that they're calling. They're calling this the cup. They're calling this the handle. Too bad cups and handles are supposed to have low volume during the downtrending parts and heavy accumulation. Not supposed to have big, tall red bars in there. So there's flaws everywhere. One of our best stocks that's up the most is ASCA. Let's see how it did today. It was barely down, but still holding up. And this has been our best long, and I got to admit, it's so far still doing good, but 39%. we should have 50% gains in stocks that move like this by now. Anyway, bottom line, my look on the market is this, using the NASDAQ. On a short-term basis, using this area right here, it's in a slight downtrend. Me using a sub-intermediate term trend basis, like from right here to here, it's in an uptrend. Get rid of that. Me using this as an intermediate term trend, you can see that it's in an uptrend. And then long-term trend, I think it's quite clear that it's still very much down on a linear regression kind of like line. And then the same thing, the exact same thing can be said for the S&P 500. Short-term downtrend the past 3 days. That's why it's down 1.12%. Sub-intermediate term, you have an uptrend here. Intermediate term, you have an uptrend going back even to November, because from the November lows to now, it's up 20%. And then long term, of course, you know it's down. And I've got this big bar that touched the closing the closings of January lows, March lows, July lows, and then cut through the September lows and break down and show you another area of resistance that we could run into. I don't think the dollar's updated on Telechart yet. Oh, it is actually. Okay, cool. So I can show you this. I'm going to get rid of all these lines now. I want to show you what I see. Okay, now this is a weekly chart. I think that this right here is the left shoulder. This is the head. This is the right shoulder. I believe I'm looking at a head and shoulders top here. Where do you go short? To me, the short has already been made. You're supposed to say, all right, from this point you go here, and then whenever it breaks down here, the head and shoulders is officially confirmed. So that's the truth. When it goes below that line, the head and shoulders is confirmed. However, I don't do that so I can get short early, and instead, since I can touch 3 lows and go across, to me, the short was positioned whenever it broke down, whenever it got back above the 50, then failed the 50, then failed the trend line. This was the short area. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So in 9+ days, you got about a 3% gain. So it's working out so far. But I do see a head and shoulders top. October to December is the first shoulder. The head's in February to March. And April to May right now is the right shoulder. And when head and shoulders break, they should be at least going back to their old lows. So I would expect the 70s to come back and play for the dollar. And it's just disturbing whenever I look at a quarterly chart of this dollar, because the downtrend is very strong. Still, though, looking at it in a completely objective area, intermediate term, downtrend. Sub-intermediate, excuse me. Short term, downtrend. Intermediate term, uptrend. Long-term trend, basically nowhere. If we go back to the 08 start, it's actually up a little bit, but still to me it looks like it's nowhere. Charts are not always a science, everybody. It's an art and a science. You have to have very excellent chart reading abilities before the science can work. If you just go by the science using technical indicators, you're going to be screwed out of a lot of longs. During bull markets, and screwed out of a lot of shorts and bear markets. Anyway, look at the lows in December. See here? Look at the relative strength line, how close is the new lows. Look at where price is compared to the new lows. So while this is just while the price is so far away from the lows in December, around the 78 area, the relative strength line is right there. That's not bullish. Now let's look at silver. If silver's updated, XSLV, yes, barely down. Excellent tail today, back above the 5,200, of course. Platinum. Oh, not a good day. That's why I don't buy platinum. Gold holding on in there with another bullish tail. Once again, you can't find a single day where gold has closed at the low a day since the September rally started. Even whenever it went to new lows in October, there wasn't any low a day close. And that's the way gold is, which tells me gold is still being accumulated even whenever it goes down. I would love to get it back to 700, 800. Something tells me, though, I shouldn't hold my breath. Okay, everybody, I'm going to go and wrap it up there, as I believe I've gone way too long. No, I haven't, but I'm almost done. So part 2, we'll have the IBD indexes, and we'll go over all my beautiful charts. And I'll make a part 3 to show you some of the longs that we're watching. And I've also included it to look at bottoming stocks, so we can look at some of the stocks that are making moves. Because if you're a trader out there, you can make trades that I wouldn't make. Like recently, like for instance, AXL. This was not a trade that I would have made. However, after this move, you could have bought it. It's making higher highs, very clear, huge breakout, green bop. You buy the next day, Next day, you're up 164% in one day. You got about 150% gain at least. So I'm looking for these again. SRI is another example. There's the buy day, the signal. Now you got an 18% gain. So I keep my eye on this. However, I know for a fact that the time to go long is like once my ASCA sets up. The 50-day moving average has got to be above the 200-day moving average, saying that resistance has been cleared, and then it has to break out to a new high and continue to move higher, just like it did. So I'm going to go ahead and end it there. Aloha, everybody. I'll be back with part 2.